What up, guys? Today I will teach you about the mini Q zones within the 90-minute cycles, okay? So let's do it. First, you put your 90-minute cycles midnight until 1:30 a.m. Okay? So quarter 1, quarter 2, quarter 3, quarter 4, right? I show you some examples here. Quarter 1, you don't want to trade, so we want to take a trade on quarter 2 and quarter 3. In this case, it's a NASDAQ. So accumulation, manipulation, distribution, quarter 2 start distribute, and quarter 3 distribute, quarter 4 almost reverse, but keeps going higher. So I show you about the mini Q zone. Here, this is the settings, fib time zone, the settings that I use, as you can see. Okay. The first thing you want to know about the big Q zones, the macro Q zones, right? The big Q zones. I'll show you some example here quick. Asia, right? Consolidation, Asia. London, when London open, London takes the Asia low, sell side liquidity. When London do this, London usually go higher to take the Asia buy side. When London take the buy side, when New York open, usually New York AM session take the London high, as you can see here. New York takes the London high. And after that, New York AM session going down until the 50% level of the London session. So almost of the time, New York AM session keeps going down until take the London sell side. And after that, in New York lunch, starts going up. New York lunch starts going up. Why? Because New York lunch usually takes the sell side of New York AM session, takes the buy side of the New York session. So New York lunch is going higher, and New York PM session usually keeps going higher to take the New York AM session buy side almost of the time. So this is just an example. But you need to be aware of the big sessions, to trade the mini Q zones, the mini sessions right here, okay? So the concept, it's the same. The first one is Asia. First Asia, London. London, you say this neutral in English, null, neutral, something like that. But this is the time almost from 2 a.m. to 5 a.m., 2 a.m. to 5 a.m. You don't trade here. Almost of the time you don't trade here, okay? So Asia, London, London neutral, New York AM session, New York lunch, and New York PM session, okay? So right here, Asia session, we have buy side liquidity, relativity equal highs, and this low, right? Look at this. London opens here, going down a little bit down here and take the sell side, and then reverse going higher to take the buy side. You see this happening on the big session, London session. You see this happening almost every day. You know that. So if you in the higher time frames, 1 hour, 4 hour, if you are looking for higher prices, you already know about the 90-minute cycles concepts, this accumulation. In quarter 2, you will wait for displacement lower, manipulation of the price lower, to take a buy and buy when the price is going down. You want to buy when the price is going down, and you buy here to go long. This is the concept. If you are looking for higher price, you need to be aware of the draw on liquidity. So as you can see here, London, you have volume imbalance right here, and you have a fair value gap, right? So these two candles, it's a fair value gap right there. No, this one. So you have right here with this wick. This is an institutional order flow anti-drill. ICT teaches that. This one, IOFED, right? I don't know how to pronounce this, to spell this in English, but it's a institutional order flow anti-drill. You want to buy here. You can buy here because you are looking for higher prices. You are in quarter 2 of 90-minute cycles, accumulation, manipulation, and you know the price will go higher. And you are inside the London mini Q zone. So you want to buy here. And where it will be your take profit? You choose higher time frame drawn liquidity, or inside the lower time frame liquidity, relatively equal highs here. And this is also market maker sell model: accumulation, low risk sell, reaccumulation, and consolidation again, accumulation, consolidation again, distribute to take that buy side. And here you have a breaker, low, high, lower, low. It's a breaker, this candle right here. I show you this. I will show you this here, okay? But look at this first. This is a breaker right there. Price breaks up and going down. Institutional order flow anti-drill, and you buy here. So if you take the standard deviation, this is my standard deviation, as you can see. ICT standard deviations. Low, high. Look at this. -2, -2, right there. Look at this. The precision. This is algorithmic, guys. So if you buy here, if you went long here, stop will be below this order block, and your take profit will be here. Okay, as you can see. So let's keep going. Let me delete this one. So if you see here, if you buy here, it's more risk to enter here, because we'll not yet, you don't have the manipulation. The manipulation of a quarter 2 didn't happen yet. So if you buy right here, it's more risky, but you decide, right? So I will wait for the displacement down, like you can see here. This is what I want to see happening on the price. So when this happens, look at what we have here. Breaker, fair value gap, volume imbalance right there. I'll show you this one. This is a volume imbalance. So as you can see here, VI, volume imbalance. Now I will buy here. But look at this. This is the London neutral, 2 a.m. to 5 a.m. For example, you don't buy here. You won't buy here. So if you don't want to buy here, because we have 4 PD arrays showing that the price is going up, we have the liquidity here. So breaker, first PD array. Fair value gap, second PD array. Volume imbalance, third PD array. Order block, fourth PD array. So 4 PD arrays showing that the price is going up. So you want to buy here. You will buy here. But if you want to wait for the New York AM session, the mini Q zone, you will buy here, you know. So look what we have here. Inversion fair value gap right there. This guy here. Look. You also have a fair value gap here, and we have an inversion fair value gap. Look how the bodies respect these levels. You want to buy here. You want to go long here, because you are aligned with the price and time. So you are in quarter 2 of 90-minute cycles, and you are on the New York AM session mini Q zone. So you want to buy here. You want to go long. Stop loss could be below here or here, and you go long. Okay. And you can do the first thing right there. Look. Standard deviation right here. Okay. -2, -2, -4, if I'm not spelling the word wrong, -4, this level here. You can put your take profit here, and you can see it will go there. So if you put your take profit above this level, for example, right here, above this level, I don't trust too much. Me personally, I don't trust too much. So if I will take a trade like this, I will put right there, or at least right here. Okay, right here. Okay, that's it. So I think I teach you everything about the mini Q zones, how to use it. Like I said to you guys, you need to treat these mini Q zones like the big Q zones, you know. So Asia, London AM, London neutral or null. I don't know how to call this. 2 a.m. to 5 a.m. You know what I mean. And this New York AM session, New York lunch, and New York PM session. Okay, look at this. New York lunch, retrace and going higher. New York, my mistake, guys, my mistake. New York AM session, retrace and going higher. New York lunch, going down. Why going down? To take the sell stops here, you guys. New York lunch, almost of the time, will going down. If New York AM is going up, going down, the lunch going down, to take the stop loss of the people here. And after that, New York PM session will going up if we are looking for higher prices. That's it. Now I will show you something for you guys that stayed here until the end of the video. You can use another 9-minute cycles within here if you want. So you do this here, for example. There, look here. Now we are in quarter 2, right? But here inside we have quarter 1, quarter 2, quarter 3, quarter 4, right? As you can see here. So accumulation, manipulation, displacement lower, and you can buy here because this is the quarter 2 within the quarter 2. You know what I mean? You get the idea? Let me do like this. You get the idea? Quarter 1, quarter 2, you know? So you do this. Bang. You see that? Are you seeing this? Accumulation, manipulation. Because if you want to see price going up, first, you want a displacement lower. You want to buy when the price is going down. It's the same thing ICT always says that. You want to buy when it's going down. So, quarter 2 again right here. You buy here because breaker, low, high, lower, low, fair value gap, institutional order flow, anti-drill, volume imbalance right there. You buy it and you go long. Okay, you can do this. So let me show you the times here. This one until this one is 22 minutes. Okay, the exact time here is 22.50, 22 and a half. But I don't have the second charts to do that. So for me, it's just 22 minutes. This one, this one, this one, and this one, okay? So that's it. I think I teach you about everything that I know. So, okay, God bless you all.